Hello and welcome to Edison TV. Today I'm joined by Ghassan Hashar, who is Chief Financial Officer at Omantel. Omantel is a leading provider of telecoms and digital services in Oman and also into the wider Middle East North Africa region through its strategic investments in Zain and Omantel International. Ghassan, many thanks for joining me today.
Thank you very much. Pleasure being here with you.
Can you start by walking us through the progress in 2025? What were the key challenges and what were the key proof points of your progress during the course of the year?
Well, Dan, on this point, I would like to highlight that Omantel continues to deliver strong performance for 2025 with broad-based growth across our domestic operations and Zain Group. The group revenue grew by 11.4% to 3.4 billion Omani riyals. Our EBITDA increased by 10.6% to 1.1 billion Omani riyals. The group net profit nearly doubled to 371 million Omani riyals, with a growth of 87.7% year on year. Our net profit attributable to the shareholders of the company for the period stands at 88.4 million, compared with last year, with an increase of 63.1% year on year. Of course, Dan, these results reflect the success of our diversified portfolio and the resilience of our core businesses and the disciplined execution of our strategic priorities. Going from there, in domestic operations, domestic challenges, and despite the challenges and the market conditions characterized by intense competition and price erosion, our service revenue continued to deliver strong performance across mobile, fixed services, and ICT revenues for the year ended in 31st December 2025. This domestic performance in terms of revenue witnessed a growth of arriving at 676.1 million Omani riyals, and with a growth of 8.6%. The increase was mainly driven by higher telco revenues, demonstrating resilience and strategic agility in a competitive market, of course. As you see, even in this highly competitive market, Omantel has been able to maintain its revenue market share and witness growth. This was complemented with the efficient cost optimization and operational efficiencies. When it comes to synergies with Zain, as you know, a very important point to highlight is first was witnessing good growth in Zain Omantel International, which is the joint venture between Omantel and Zain. In addition to that, I wanted to also highlight, before I conclude my answer to the first question, that we have been able to realize synergies in other areas like sourcing and procurement, as we've been doing in the past years.
So you've got an ambition to capture 25% of the Omani ICT market, and that's a growing market with the Vision 2040 plan. Can you explain how you expect the company's growth and margin profile to evolve as you develop that business?
The shift towards ICT and emerging tech revenue streams is, of course, strategically positive, but within reasonable margins in the early years. That's a very important point to highlight to manage the investor's expectation. Although in absolute terms, it will add positively to Omantel's EBITDA. You would agree that high growth tech verticals require upfront investment in digital platforms and smart infrastructure. All of this should be done before scale and efficiencies show through at a later stage. We strongly believe that our reach to 8 different markets, including Oman, will help us build the scale. Therefore, this, as we believe, is going to be a critical success factor as we transform Omantel from a telco to a techco.
And can we turn towards capital allocation? The transition from telco to techco is obviously a significant transition. It requires investment. I guess there's some risk with that, but equally in these evolving times, there's also significant risk through not evolving. But can you discuss how you balance that investment in growth versus the need to retain good returns for your investor base?
That's definitely important point, Dan. And Omantel will be able to maintain and grow the shareholders' returns if we continue to invest in new technologies along with the core. Of course, what's important is the outcome of this is supporting our transformation from telco to techco. Our approach to capital allocation is built on balance and discipline. We fund the techco transformation, including platforms, digital platforms, cloud and smart city infrastructure, because these are the engines of Omantel's future growth and competitiveness. But we do so within a rigorous financial framework that preserves balance sheet strength and maintains our dividend payout commitments to our shareholders. Strong cash flows from our core operations, wholesale business, and international assets gives us the flexibility to invest in the future while still delivering attractive shareholder returns today. Ultimately, our goal is to ensure that every investment made drives long-term value creation without compromising stability or returns through the cycle. Uh, that's, I believe, all I could add in terms of the question you asked.
So shareholders are expecting a dividend payout of 55 paisa per share. As CFO, how do you balance dividend payouts versus capex requirements to fund the company's future growth profile?
To begin with, as a company operating in the telecom and technology industry, telecom, as you are aware, is a highly capex intensive industry, and transformation to a techco invites additional investment. As I mentioned earlier, we follow a very disciplined process of reviewing each investment opportunity to ensure we maximize value to our shareholders. Omantel has been continuously declaring 55 basis per share as dividends. And our robust financial performance has ensured that we are able to deliver the same despite new investments. We also ensure that we transparently share our strategy with the investors community to enable them to understand our investments and performance better.
And from a CFO perspective, what do you see as the strongest reasons for investing in Omantel, both from a fundamentals and a valuation perspective?
Yes, actually, the strongest case for investing in Omantel today comes from the combination of a resilient financial base, a diversified and growing business model, and a clear transformation strategy. That positions us as an integrated digital and technology ecosystem in Oman and the region. Our core telecom operations generate stable cash flows, while our international footprint and the Zain investment, of course, provides additional earnings resilience and the benefits of scale. At the same time, our techco transformation, spanning cloud, data centers, smart city solutions, fintech, and wholesale connectivity, it creates compelling long-term growth while aligned with Oman's Vision 2040. More on the investment case, Dan, looking at our peers in the region, Omantel represents a unique investment opportunity anchored in market leadership. When we talk about a market like Oman, and adding to that the regional scale and a future ready digital strategy. Of course, it's important to realize that Omantel, as Oman's most trusted and dominant telecom operator, with leading positions in mobile, fixed, and broadband, which are the conventional revenue streams of any telco service provider. It generates strong recurring cash flows supported by a loyal customer base. Its unique regional wholesale and data infrastructure footprint includes over 20 subsea cables and key landing stations, and a growing network of data centers, which positions Oman as a strategic regional connectivity hub. And of course, as a result of that, attracting global partners such as the hyperscalers and carriers. So, to sum it up, of course, then beyond traditional telecom, Omantel is rapidly scaling towards high growth digital verticals in ICT, spanning to cloud, cybersecurity, and the other verticals, as I highlighted earlier, providing revenues that are diversified in nature and deepening enterprise relationships. The company's strategic stake in Zain Group unlocks incremental earnings and shared capabilities with access to 8 MENA markets with over 50 million customers, delivering regional scale not available to local peers in the MSX.
And as the MSX looks to transition from a frontier market to an emerging market, can you discuss what Omantel is doing to capitalize on that transition in terms of investor visibility, investor disclosure, and so on?
Having a disciplined capital structure with investment grade credit outlook, strong free cash flow generation, and a consistent 55 base dividends reflect a long history of stable shareholders' returns. The company is also directly aligned with the country's or Oman's Vision 2040, enabling national digital transformation and being the country's champion in cloud adoption, smart cities, and sustainable network development, creating this long-term growth and reinforcing Omantel's position as the regional data connector powering digital change. Moving ahead also, it is worth mentioning that as the MSX moves towards a potential upgrade from frontier to emerging market, we have already elevated our investor relations platform to meet global institutional investors' expectations. We believe that an upgrade would attract a broader pool of international investors, improving liquidity and tightening valuation spreads. So as Omantel, we ensure that we are prepared and ready, and we have been always targeting to widen our investors' footprint, whether regionally or globally.
Ghassan, many thanks for joining me today. That was a very helpful discussion.
Pleasure.